Well, this was a perfect article for today. Will home prices drop? Will mortgage rates rise? What to expect in the fall housing market? So that's going to be our agenda today, us pivoting around what the Federal Reserve does. So this week, as you guys know, if you follow my channel, the Federal Reserve is meeting today and tomorrow. Then tomorrow at 2 o'clock, I'm going to have to change my live event because it was 2 o'clock Eastern. So I got to change my live event for tomorrow. So it's going to be 1 o'clock Central Time. That's what I am. So we're going to go live to watch what the Federal Reserve does. So join us then. But what we want to focus in on is this: housing, mortgage rates, inflation, and so forth. So what we want to do is go over to the headline numbers. We see right here. This caption right here is telling us what the Wall Street actually is doing, or what they're expecting from the Fed. So now let's see what they're saying. The Fed is now expected to keep rising rates, then hold them. I'm still contrarian to that, CNBC survey says. So let's get into these details. Here's where the central banks want, or Wall Street expects the central banks to be by the end of this year and next year. Their forecasts are terrible. You can check out a video. I'll try to find it, and if I do, it'll be right up here. I did a video a couple years ago saying, hey guys, the Federal Reserve came out and said they're not going to raise rates until 2023. That was in 2021, and then 2022 we've seen 4 rate hikes now. So that doesn't make much sense. But here's what they're saying. Wall Street thinks that the Federal Reserve is going to raise rates all the way to 4.26, and I'm going to show you how that number reflects here in a minute. The growing concern, though, is right here. Like I've been saying for the last months and months and months, I think they're going to overdo it, and now a lot of Wall Street analysts are thinking the same thing. They're going to push us into a recession. So let's get to where Wall Street expects the federal funds rate, and we're going to just focus in on that right now. If you have questions on the federal funds rate, leave some comments down below. I'd love to explain that for you. But here's where the federal funds rate, here's where they expect it to go, and then what we're going to do is look at how we're going to get there. So right now we're at 2.4. We're expected by December to be at 3.9. So that means we're going to go up 1.5%. So that means the Federal Reserve is going to raise rates 1.5% from now to the end of the year. Well, in the next meeting, we pretty much know, and I'm expecting this, and it'll be a curveball to me if they come out any different, but I'm expecting the next meeting to come out at 75 basis points increase. So the Federal Reserve is going to increase rates by 0.75%. So then how do we get to this 3.9 number? Well, there's 75% or 75 basis points left, or 0.75% of rate increases left. So my expectations, I forgot to tell you guys this yesterday at the end of my video, here's what I'm expecting to see in the next 3 Fed meetings. So they're going to meet in September, they're going to meet in November and December. So in this meeting, they're going to raise rates 0.75%. That's going to bring us up right below the 3.9%. We're going to be 75 basis points from there, as I just stated. So sorry for repeating myself. So in my expectations for November, they're going to raise rates 50 basis points, or 0.5%. Then in December, they're going to raise rates 0.25%. That could change based on the inflation numbers, but I don't think it's going to. They're going to stay on this path because they've got to build credibility. That'll take us to the 3.9 rate. So that's my expectations for the coming months. So let's see what Wall Street has to say about a lot of this stuff. Well, we're continuing to see the market crash again and again and again. Again, look, Dow Jones down 300 basis points. Why? Federal 2-day policy meeting begins and they expect rates to surge. Okay, so that's the part of the equation that I want to talk to you guys about, rates. So now a part of this is what's going to go on with housing from there. Well, let's start looking at this piece of the puzzle. So we know the demand because interest rates are going up and up and up are starting to slow down dramatically, actually. But now let's check out the supply equation of this. So when you read it at first, you see August housing starts, record number of housing units under construction. Like I always say, don't judge a book by its cover. So what we want to do is dive into this data. Hold on a second. I'm an old fella, as you guys know. Privately owned housing starts in August were at a seasonally adjusted rate of 1.575 million. This is a 12% above the revised numbers in July, but 0.1 below the August numbers. So it says there's a record number of houses under construction. Well, then we go to this piece of the puzzle and we see, I'm going to try to roll it up so I can get my head out of the way. Privately owned housing units authorized by building permits in August were at a seasonally adjusted annual rate of 1.517. This is 10% below the revised July number of 1.685. and is 14% below the August 2021 numbers. So we aren't at a record number of new home construction. I get where you guys watch these or go to these websites and the data is just confusing. That's why you need to join into my channel so I can show you guys the facts behind all this stuff. So the next piece of this puzzle, let's see this. This is the number of housing starts. Look where housing starts. For those that are saying, you know, we don't have a housing shortage, look at this. Let's just blend this together. Let's just say, okay, well, let's look at it this way. You go over here and here's the number of 2-unit starts. Okay, we're right here. We were higher than that in 2020. Okay, so it's not a record number there. The next piece of this puzzle is here's 1-unit structures. We're right here. Do you see a record number? No, I see a record number here. So we don't have the record-breaking numbers of new homes coming to the market. Okay, so now let's piece this all together. What we got is the demand. Well, demand starting to really taper off because of rates and affordability. Then we have starting home starts or permits. Those are actually coming down as we're seeing here. So if we have less homes and more demand, well, that's going to have prices coming down. So again, guys, I'm not preaching FOMO that you need to buy. I'm not even predicting a crash because I think we're going to get a correction. My idea of a correction is about a 10 or 15% adjustment to house values. That just puts us back to where we were 6-8 months ago. So it's not a crash, and I'm not expecting a crash. So let's check out the economic data for today to see if there's anything else on the agenda that we should look or focus in on. We see right here building permits that we just saw. It came in at 1.517. That record number that they were talking about when we previously came off of 1.685. So it's not a record. Again, don't judge a book by its cover. So the point why you're here is you're here for mortgage rates. So with all this data coming in right now, what the heck is this doing for mortgage rates? So what we do is we go over to here. Here's the top 6 products that are posted by Mortgage News Daily. If you're buying a house, you're buying your first house, here's one of the products you're probably going to get qualified for. 30-year fixed, 15-year, the jumbo, the 5/1 ARM, FHA, and VA. You can see yesterday I predicted the 30-year fix would probably go to 6.5%. We had a little easing in the market midday in the latter part of the day, but it still hit a record high of 6.42. I'll rephrase that, not a record high, but a record high that we've seen in the last maybe 10 or 15 years. So that's where we're at right now. These are not my rates. These are actually no lender's rates. These are an average throughout the whole country. What happens is Mortgage News Daily sends out a survey to mortgage lenders all over the country and says, hey, if you had a client looking to buy a $500,000 house, 20% down, 740 credit score, single family home that they were going to live in, those are my legal purposes. And here's where the rates would be. This is a national average. To find out what we can do for you, if you're in the middle of a mortgage right now and you want to check and see if you got the best program, email me. I'm going to put my email information and all my contact information down below in the description. Email me your loan estimate. We'll do a free review. We'll actually scan that review to over 100 lenders in the whole country to ensure you guys are getting the best rate. All you have really to do is send me that email. And other than that, just sit back and wait for us to reply. So what's going to happen is we're going to come back and say, God bless you. You did a fantastic job. You got the best rate out in the market. Or we're going to come back to you and say, hey, we can get you a better rate and better fees. Why not use us? So if you want to find out more about me and my team, all you have to do is go to therateupdate.com. You're going to find everything there. And if you enjoy my videos, how about podcasts? So go to your local podcast or whoever you podcast through, just search Dan Frio or The Mortgage Update with Dan Frio. That's me. Check it out. I hope you enjoyed those as much as you do my YouTube channel. So God bless, guys. Thanks so much. Don't forget, I'm going to change the live event from tomorrow at 2 o'clock. I had it at 2 o'clock Central. It was supposed to be scheduled at 2 o'clock Eastern. So I'm going to revise that down to 1 o'clock Central, 2 o'clock Eastern. Tomorrow we'll go live to watch and see what the Federal Reserve actually does. So thanks for watching. If you like my videos, please don't forget to give us a thumbs up, subscribe down below, hit the bell every time I post a video, you get an alert. God bless, guys. I'll see you tomorrow, actually in the morning, and then I'll see you live at 1:55 Central Standard Time. Thanks for watching. Bye-bye.